All right, guys, so this is another powerful strategy that is going to give you good entries on the boom and crash market. Good selling opportunities, good selling opportunities on the boom and crash market. All right, before I show you what to do to have good selling opportunities, let me quickly show you something that you should avoid. Okay, now I'm going to talk about making sure that the black line here, please, for the purpose of understanding this video clearly, I would like for you guys to use the exact colors that I'm using, so that whatever I explain, if I don't have to mention the indicators by their name, so that people who are just new to this would be able to comprehend, right? So we use colors, so make sure you follow the same colors that I'm using on the indicator settings. Okay, but then now look at this. You can see there is a crossing between this black line and this red line, right? There's a crossing here. Now this is what you are looking out for before you can have an entry, but I rather have this crossing happen at the level 90, somewhere around here. All right, I rather have this crossing happen around here before I can conveniently take a sell. Now look at that, look at this. You see that after this crossing, you can see that the market started selling. It has been selling all the way from this level, guys. It has been selling all the way from this level. So anybody who had entered a sell here would have had all of these candlesticks to themselves before this spike that just happened now. All right, but it is not ideal for you to enter a sell when the market just crosses anyway. Just like price action traders won't just jump into the market, just like price action traders won't just jump into the market just because there is a bearish candlestick or a bearish chart pattern or a bearish whatever happens in the market. You don't enter a trade if it is not at your key zone, right? If it's not at your area of interest, you don't enter a sell. So that's what I just explained now. You don't just enter because the market has crossed these two lines. Now this is going to happen around level 90. We are trying to sell, we are trying to scalp, we're trying to take a couple of candlesticks and leave this market, right? So you have to make sure that this condition meets right on this level, right? This is your area of interest. This is where you want to be selling. This is where you want to be placing yourself from. All right, so let me quickly show you examples. Now you can see that there was this long sell when this happened, when price crossed, when these two lines, the black and red line on my indicator window one, crossed each other right at that level. Okay, so that's what I'm talking about. Ensure to see that there is a crossing, and that crossing happens just at the right place, which is this level. Okay, which is this level. So these are just a couple of examples. You can see that this happened again. This was a long sell that would have given somebody a lot of profit, and there was a crossing right around that level. Okay, right around that level there was a crossing. So I would rather have a crossing at that level before I place. This is a good one. This is a good one, another good crossing right at that level. And then you can see that the market showed, even when there was a spike, it was just little, and you can catch up to 10 to 15 candlesticks from this market just before a spike comes in. Okay, just before a spike comes in. This is another good example right around that level, and then you see that the market dropped drastically. All right, it dropped drastically. So you have to ensure that this condition is met right at the level which you are interested in, and this level which you are interested in is your key resistance level. Okay, key resistance level. My students will understand this better because I teach them all of this. I teach them how to be able to identify these areas without the use of indicators. I teach them to identify your their key sell zone, their key buy zone, which is your key support and your key resistance level, whatever you want to call it. All right, some people call it demand and supply zones, or whatever you want to call it. My students get to understand this properly. So if you are not in my mentorship program, you should be a part. It's very affordable, and if you can't afford my mentorship program, still be able to get a clear understanding of how this works. Okay, so quickly here, you will get to see the setting of these indicators that is going to give you good entries, and I'm going to also explain again how you can have this good entry. So let's go into seeing the indicator settings. Now we are going to be using relative strength index. We are going to be using MACD. All right, relative strength index and MACD. So for the relative strength index, these are the settings. We need period 12. You need to apply to close. You need levels 90 and 10. And when you come to levels 90 and 10, you of course you can label them if you want. This is actually going to be your sell zone, and sorry about that. And this is going to be your buy zone. All right, it's okay if you don't label that. It's very okay if you don't label that, long as you will understand that the level 90 is where you want to be selling from, and the level 10 is where you want to be buying from. That's if you are buying a crash market to catch a couple of candlesticks and leave the market, right? So for the pixels, you leave it at 3 pixels. You leave it at these dotted lines, okay, the middle line, and then you click done. And then when you come to this side, please remember that the colors I'm using here is red, right? When you come to this side, leave it at black color. That is if the background of your chart is white, just like my own. Okay, so leave it at black color and leave it at all time frames, and leave it at the third pixel. All right, and leave this particular one on the first line, the line, just the first line pattern here, not the dotted, not the, just the first line pattern is okay. And you click done when you are done with that, and you would have your level 90 and your level 10. All right, you have your level 90 and your level 10 right there. Okay, so the next indicator will be the MACD, which will have the fast EMA 13, slow EMA 25, MACD SMA should be 10. Apply to close. There's no levels needed, so you don't have to add anything there. All right, and then leave it at all time frames. For your main style, you leave it with, just use the blue color since I'm using blue, and make it 3 pixel. Okay, and then for the other one, the signal, leave it red color, and please use the plain line, leave it at 3 pixels. Okay, red color, plain line, 3 pixels. You're done with that, you just simply click done. Right now, the condition I was explaining earlier is that you wait for price to come to level 90. Right, by that I mean your indicators here should converge at level 90, and then around that region there should be a crossing. What you're seeing here, the black line should cross the red line and be going downwards. Okay, now let me show you examples. Let me show you more examples. Now this is another example of this happening. Now this is right, it did not cross exactly at level 90, but it went close to level 90. Okay, now the level 90 is actually showing you an area. It is why it's called a zone. It's not an exact or a specific line that the price must respect, right? It is a zone. So the line, the level 90 there indicates that zone. So whatever happens, whatever price action you see at that zone, whatever reaction of the market you see at that zone is what you are looking out for. Okay, if there's a bearish momentum at that zone, then it means the market is going to respect that zone, is going to go down. All right, so this was a crossing right at that zone, and then you can see how the market dropped very drastically. You can see how much someone would have made if they had entered the trade. If you enter a sell here, you know how much you would take out from the market before this little spike here. Now another thing is, for you to be on a safer side, you want to be sure that what you are doing, this is another example. You can see how long the spikes are. I mean the candlesticks. You can see there was a crossing over here, there was a crossing down, the black line crossed the red line here, and then it this happened. Now for you to be on the safe side, you want to be very sure that what you have seen the indicators telling you are actually true. Then you have to be able to go to the higher time frames and look at the candlesticks and make sure that they are at your key resistance level. These are for people who have a fair knowledge of price action. Okay, if you have an understanding of price action, you should be able to identify your key zones using your either your horizontal lines or your trend lines or your Fibonacci levels, whatever you use. So make sure you are able to identify your some people even use moving average to identify these levels, right? So make sure you're able to identify your key zone, and if the indicator says that price is at your key zone, by that I mean if your all these indicators converge at the level 90 here, and then you check your let's say the 1 hour time frame or the daily time frame or the 4 hours time frame, and you see that price is actually at your key level that you were able to identify, that is your key resistance level. Okay, at that point you are sure that the market is at that zone where there is bound to be a price reaction or a price action. Okay, you are actually to look out at for the candlesticks pattern. You want to see the let's say the bearish engulfing candlestick. You want to see the double top at that region. You want to see the head and shoulder at that region. You want to see all of those clear patterns that signals a downtrend or a downward movement of the market. All right, if you see all of that, then these are what we call confluences. These are all of these coming together to give you a good reason why you should sell. All right, if you don't know how to do that, you can simply just follow the instruction I've shared in this video, and you'll be able to still catch some candlesticks and take some profits out of the market. But it is safe for you to it is safer if you know how to analyze the market on your own with your naked eyes, all right, without or only just depending on the indicators for confirmations. Okay, it is safer that way. That's why I train my students to be able to identify their key levels, to be able to identify key entry zones, to be able to analyze the market from top down to the lower time frames, to be able to find good trading opportunities. Right from the higher time frames, you are to actually identify the trend of the market, and then scale down to the lower time frames to find an entry just to follow that trend that you have seen. All right, so if you want to be a part of that class, it's very affordable. You can just reach out to me on my WhatsApp. I'll be dropping the link to my WhatsApp on the description box of this video, so make sure you click the link and reach out to me, and then I'll give you the pricing. It's very affordable, like I said. And if you also are not a part of the free Telegram group where we share free information that will help newbies and even intermediate traders to become advanced or to become professional, you should make sure you join that group. It is very free of charge, and you get a lot of valuable information that will help you in your trading journey. Okay, so do well to reach out to me, and let me know if you have benefited from this strategy. Let me know if you have challenges. Let me know on the comment section also. Let me know where you want me to address. Let me know what is challenging you and you want me to talk about in the next video, so that I'll do just that for you guys. Take care of yourselves. I'll see you guys in the next video.